The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got 24 minutes to go until the start of trading, and we have markets pulling back a bit. You got the S&Ps off more than 0.5% right now. You're negative 24 points. That's just more than 0.5%, trading at 44.13. Quite the volatile week we've had. You almost got all the negative action. Not almost. We actually almost got all the negative action back from where we were positive for the week into the close yesterday, as well as overnight. We've pulled back to that level. Just zooming in on where we are yesterday, looking at the action, we opened the trading session at about 44.01, maybe just below 4,400 at about 9 a.m. We make it all the way to a high at about 2 p.m. Eastern time yesterday of 44.55. I mean, the swings are just both ways, folks. We have a two-way market right now. The swings, I mean, you're talking about from 44.55, we're down about 42 points from the highs. That's about a full 1% give back. Now, just putting this thing on a 10-day, 30-minute chart, you see the acceleration really began on Friday at a price level of 44.62. You trade down about 170 S&P points from Friday's open to Monday's low. Dramatic, folks, when you look at those price points, and you almost get it all back. So 42 points, that or thereabouts, not really a big movement on this chart when you're dealing with movements of almost 175 points over a couple days on the S&Ps. Taking a look at the NASDAQ, a little bit of a different story, but same thing. You get it all back from Friday's acceleration lower. I think at one point on Monday, I think you had the NASDAQ down almost, NASDAQ 100, this is, almost down 3%. And meanwhile, you get it all back over the course of Tuesday and then Wednesday and Thursday's action higher. NASDAQ 100 down 0.75% right now, a little bit more than the S&Ps. You got the Dow off 0.5% as well, 34,479. We're about 1,000 points from the lows we had Monday. Same thing on the Dow. You get it all back, and we get the Russell right now, negative by 15 points. You look at the Russell actually above where we were on Friday action. Take a look at the Russell. You are just right in the middle of this consolidation we've been in since the better part of 2021. You really came into that consolidation area in the beginning of February. We've been chopping around between about 2,100 and 2,350 in that Russell. All right, jumping around to what else we have going on. Why not? Let's jump to Bitcoin, because this is going to be a story, folks. And man, oh man, watch out. You got Bitcoin down $3,700. That's 8.4%. There's your action overnight. China basically saying that all crypto is illegal. You jump over to the daily. All right, now you're going to be coming back down to the lows we had the last couple of days of 40,000. But man, you break that area, and it was a real quick acceleration from 30 to 40,000. And let's jump over to the headline. China bans crypto transaction, vows to stop illegal mining. Not what you want to hear if you're a crypto bull. Not too surprising, though, as well, with everything else going on with China recently in terms of clamping things down. Seems like they would not want crypto in any way, as they want control over everything. Currencies cannot be circulated. The PBOC says in a statement, planning agency says crackdown important to meet carbon goals. Okay, they're claiming carbon goals. Maybe that is a goal, but I imagine if you are President Xi over there, last thing you want is people to having the use to use crypto that might be able to subvert some of the control that they want over there. And they banned it all. We're going to pull up Ethereum. Ethereum's lower as well. Crypto-related transactions will be considered illicit financial activity, and you do not want to get in trouble over in China, folks. Not at all. Including services provided by offshore exchanges. People's Bank of China said on its website, it added that cryptocurrencies, including Bitcoin and Tether, are not fiat currency and cannot be circulated. Harshest step yet, as it says on the Bloomberg article, that China has taken against crypto and strikes at the heart of the market that's boomed this year and attracted enthusiasts, including Elon Musk. And so there's your Bitcoin acceleration. Let's jump over to Ethereum real quick. There's your chart of Ethereum. Ethereum down $362, about 11.4%. We pulled it up, right? Bitcoin down about 8.5%. Ethereum down about 11.5%. Same action, though, coming into the lows we had recently. And if you accelerate past those lows, we talked about it on Bitcoin's chart. Bitcoin, you got an area between about 40,000 and 30,000. Okay, if you're out there on Ethereum, that area is a lot wider because Ethereum had bounced much faster than Bitcoin did. You almost got right back up to the highs. You basically did. I mean, you got, you had a couple tails up here above 4,000, but for all intents and purposes, Ethereum on September 3rd got up to a high of 4,056, basically right near the teetering high that we had back in May. You give back $1,200 immediately on the price in terms of from 4,000 to 2,800. And if you're going to go back and test that lower area, I'd say that's about 2,000 on Bitcoin in terms of, 2,000 on Ethereum of where you could trade from there. Be aware of that, folks. That is the type of headline that it can hurt crypto in a big way. I mean, it seems so obvious, but China is not the only country that could do this. They are, of course, pretty dictatorial in terms of how they're coming at most of what's going on in their economy. But this risk is a risk in that market that you better be aware that news could break at any time with almost any country in terms of really clamping down by the regulators. And China just, clamps it down to the nth degree, of course, saying it's illegal and it's illicit financial activity. That's their way to regulate it, to basically stamp it out completely. And China's home to a large concentration of the world's crypto miners. They're using a bunch of energy, as we've all read about. Dominant player in crypto, and recently as April, had a 46% share of the global hash rate and measured computing power used. I mean, that's a staggering number when you look at what's going to happen if that's all illegal at this point, but nonetheless, that comes out overnight. Staying with the China story out there, China, they added $71 billion in cash with a B in the past week just to calm nerves with everything going on over in China, reverberating around the globe, having to do with Evergrande. People's Bank of China injected a net 460 billion won, 71 billion US in short-term cash into the banking system in the past 5 working days, including 70 billion won. So that'd be about 15% of that. So what is that? That's about $10 billion on Friday. That's helping ensure sufficient liquidity throughout the Evergrande crisis, as well as meet extra demand for funds before China's week-long holiday at the start of October. Cost of borrowing overnight fell to 1.68%, the lowest level since July, down from 2.28% last week. That part of the reason that our market's even calming a bit, probably as things reverberated from China over to the U.S. Fears not as bad as once seemed, and markets catch a bid. And today we give it back a bit, but all things considered, we just traded up. Even if you go from the lows we had, let's just go from the closing action on Tuesday of 44.31. Let's see what kind of Fibonacci's we're dealing with in terms of potential here. You're looking at a 382 retracement of about 44.07. That would correlate to the high spike, actually, that we got on Fed Day. You see that volatility on Wednesday. Now, what's remarkable is, so 44.07, and that is just from Tuesday's acceleration where you started really higher. If you zoom in on this action, right, the Fed volatility, I mean, these bars are huge, folks. You're talking about a bar here. A low of 43.75 and a high of 44.02. That's a 27-point S&P bar as we oscillated around during Fed Day. Seemed very volatile, but man, look at the volatility we've gotten since then. You trade up to 44.56. We're back to 44.13 this morning. Negative action to kick things off. We'll jump over to the VIX this morning. Above 20 yet again. Stay tuned, folks. When we come back, we'll take a look at Nike trading lower on their earnings after the bell last night. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. I got a chart of Nike up here. Nike trading down about $8. There's your daily chart. We don't see the action overnight on that chart just yet. And there's your overnight earnings last night. Nike guiding down in terms of outlook, having to do with supply constraints from 159 to 151. Jumping over to their numbers, they make $1.16 versus $1.11 expected. Revenue a miss by about $210 million, $12.25 billion versus $12.46. The worry here is lowering the fiscal 2022 outlook to account for longer transit time, labor shortages, and prolonged production shutdowns in Vietnam. Now expects full-year sales to increase at a mid-single-digit pace, compared to a prior outlook with a low double-digit growth. In the fiscal second quarter, it sees flat to down low single digits. Flat to down, not what the market wants to hear. Analysts have been looking for a revenue growth of 12% for the year, as well as 12% increase for the second quarter. Quite an adjustment from those numbers. Man, it's amazing. Sometimes, though, the expectations for some of these companies, you think a company the size of Nike, they're growing every single year. They're growing in the low single digits after quite an acceleration recently, but the market says, no, we were pricing you according to a growth of low double digits. Since mid-July, the company has been working through factory shutdowns in Vietnam, where it produces roughly 50% of its footwear and 30% of its apparel. Facilities have been closed as the government tries to tamp down the spread of COVID-19. 90% of Nike's footwear factories in South Vietnam and roughly half of the apparel factories in the area remain closed. That's a tough one to get over, folks. Can't make anything when the factories are closed. We've already lost 10 weeks of production, and that gap will continue. It's going to take several months to ramp back up to full production, he told analysts. Interesting. I mean, you could argue that now that maybe they'll try and be a little bit more diversified with where they have their production, because you're all in one area. It gets clamped down, something probably a risk that Nike did not see prior to COVID taking place. But you take a look at Nike. So there you see the action. We're trading at 151.15 right now. You put it on the daily, point being, man, we're coming right into this gap, folks. The low of that day, 150.48. We're going to open within 75 cents of that gap, and that gap's only going back one quarter ago. when they had higher aspirations and you trade back to the lower range, you're talking about 133, folks. You filled that gap. Nike down about $8 today to kick things off. Excuse me. Okay, let's jump around to what else we have going on. I'm going to jump real quick to stocks making moves to get we're going to do Costco real quick. Costco with their numbers as well. They beat on the top and bottom lines. Company reported $3.90 in earnings. Pre-market is what they have to say here. Costco, there's your daily. Right now at 452, quite the acceleration this thing has had. And yeah, we got this thing with a bid ask at about 453, so maybe $1 to $1.50 higher. There's a little bit of volatility on their numbers last night. Pretty tame action, all things considered. Sitting right near all-time highs at 453. Now, Costco, what else they have going on? Got another story up here, a couple stories. So they beat in a pretty decent way. They're trading higher. What else we have up here, though, is that Costco, they're going to bring back purchase limits on toilet paper, cleaning supplies, and more. CFO Richard Galenti said the retailer is bringing back purchase limits on household essentials, toilet paper, bottled water, cleaning supplies, to make sure those items stay on shelves as it copes with supply chain challenges. Kind of a theme here, right? Going from Nike to Costco, shipping delays to truck driver shortages. There's a lot going on in there. The retailer saw strong demand for home furnishings, sporting goods, and jewelry in the fiscal fourth quarter, even selling some rings in the $100,000 range. Hey, kudos to whoever's out there buying jewelry at Costco for $100,000. If you know what you're buying, I guess that makes sense. Man, you better know if you're spending six figures on jewelry at Costco. I'm unfamiliar with the market in terms of how Costco compares with six-figure jewelry. But they get into how this is a little bit different in terms of what we had originally when we were dealing with supply problems. The new product limits are prompted by a different challenge than the ones in the earlier phases of the pandemic when stores saw unusually high demand for paper products. We're all familiar, right? Antibacterial wipes as customers stockpiled. So the early on the pandemic, it was because everyone was stockpiling. There was just crazy demand. Stores couldn't keep up. Right now, different scenario. A year ago, there was a shortage of merchandise. Now they've got plenty of merchandise, but there's 2 or 3 week delays on getting it delivered because there's a limit on short-term changes to trucking and delivery needs of the suppliers. So it's really all over the board. I mean, as these companies come out with their earnings, folks, it's stretching where there's just the supply chain's getting stretched up and down the chain. And you're starting to see that hit, whether it's earnings, whether it's companies like FedEx talking about they had to spend $450 million extra money to deal with some of those woes. Now it's Nike guiding down because they can't get any of their products produced in Vietnam. Now you have Costco limiting the goods that are produced because of what we see going on in terms of the delays. That's going to reverberate. And I imagine that you're going to see that more of a theme. Surprised that the market's not paying attention because, man, if that starts hitting higher wages, higher costs, and difficulty getting the goods that you need to deliver the numbers that you're going to need, that's a tough one, folks. But Costco higher on their strong numbers in a big way. They're going to limit some of those goods out there, and Nike trade lower on their numbers. Let's jump around to some of the other stories I have up here going on. Where are we going to start at? Let's jump to inflation, because this is a good article with some interesting statistics here in terms of similar theme, the return of empty shelves and panic buying. Supply chain issues are leaving supermarket shelves empty. Shoppers might make things worse. That's stating the obvious, okay, in terms of if they're empty, it's kind of a self-fulfilling prophecy, right? Once the run starts, the run accelerates, because if you see a run on products, can't blame somebody for jumping in on that, making sure that they're covered themselves. This isn't due to people panic buying toilet paper as they did early. Rather, it's because the supply chains are clogged in almost every stage between Asian factories and grocery stock rooms. And this is what I was saying. Every stage of the line, supplies are struggling as producers such as Vietnam, there's Nike for you, responsible for making everything from sneakers to coffee, are hurt by COVID. Surging virus cases and consumer demand are leading to congested ports. Shipping containers are in the wrong places. Sea freight costs are up tenfold. Did you hear that? Tenfold. If goods do arrive at the destined port, there are too few trucks deliver the transport to the retailer, shortage of workers to harvest and prepare foods. I mean, that's pointing to inflation, folks, in a big way. When you look at stockpiles, okay, beverages have been hit particularly hard by recent supply chain struggles. And this is U.S. percentage in stock. Soft drinks, you see the volatility here. Back in March, you really tanked at 83%. We got things back in line. And then just recently, as we've come into May and June, you've seen a decline. Breakfast, you're down to only 83% of stocks. Liquor down. Looks like people enjoying their liquor. Coffee and tea as well. You get into sticker shock. Prices are rising sharply for some U.S. food items. I mean, these rises, folks, let me make sure. I got a couple charts down here. Yes. Okay, so we're going to jump to this one first. And then I'm going to tease for the break when we come back from the open. Sports drinks up almost 20%. I just don't see these prices coming back down, folks. The longer we go, the more data that comes out about the rising prices of inflation. Now, they'll always say take food out of it, right? Take food and oil out of it. You can't really do that, folks. We'll get into this, and we're going to talk about this chart as well in terms of U.S. food prices this year versus last year versus 2 years ago. We'll be back for the open, folks. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. We got markets catching a little bit of a bid. Let me pull this drawing off my chart for a little bit of clarity right here. We have the S&Ps trading negative 18 points at 44.19 right now, folks, in the final 15 minutes from 9:15 till 9:30. Caught a little bit of a bid there coming into the opening bell. We'll see how we trade from there. Getting back to a little bit of inflation talk. So look at these numbers, right? This is the price per volume change in the week ending 9/12, so September 12th from a year earlier. Sports drinks 20%, breakfast meats, eggs, meat of any refrigerated kind, dry fruit snacks. They are delicious, but man, they are expensive. I can attest to that. Shortening and oil, olive oil, great for cooking, nice healthy fat to cook with there. Refrigerated side dishes, 12%, carbonated beverages, 11%. So those are big numbers just over the year. Now check out this. U.S. food prices are starting to increase. This is the price to mix change from a year earlier is in the blue versus 2 years ago is in the black. Folks, you're talking about 9.5% on a 2-year basis. And the reason why 2 years is so important is just because 2 year takes us back to a more normal time, for lack of a better term, outside of the influences of COVID going on, talking about 10%, even from a year ago, where things were already elevated, right? You're at 4.7% from a year ago. Just in June, that number was 7.4%. That is quite a climb. You back things up to February, and on a 2-year basis, we were only up 5.4%. That means over the last 7 months, almost half of the rise in the food costs over the last 2 years has occurred since February to September, 9.5%. And then they get into how it may accelerate from there. We're seeing all these supply constraints going on. We're seeing the fact that that may cause some empty shelves or some limits like Costco was already putting in. First thing I said to myself is, wait a second, they're going to start limiting things again? Does that mean I need to stock up? It's a human reaction, folks, all right? You know, hopefully there's not a rush that accelerates this even more, but you can't fault somebody for a human reaction saying the shelves are going to be empty. I need mine too. Does that mean I have to go out and stock up? And that's what they're saying. Then comes the buying in bulk and crowdsourcing. With food costs expected to rise further, are consumers going to try and load up on pet food while they can, or something like that, right? It wouldn't be surprising for people to get together and you buy giant packs. Maybe you're trying to go to Costco if things are so expensive. You say it wasn't the end of the world to buy some stuff at Publix occasionally. I love Publix, but man, they're expensive compared to some of the other retailers in the grocery market out there. Would it make sense? Maybe I don't want to pay that extra cost considering the rise that we've seen recently, and I might go to Costco and stock up more than I normally would. Therefore, then eating into the supply more than you normally would. And then, of course, decreased supply. You're going to cause price increases for the same amount of demand. That's going to cause further inflation. While a little inflation is generally good for supermarkets as it elevates the overall value of sales, the danger comes when it exceeds manageable levels and consumers trade down to cheaper items. So there's a lot going on there, but man, you cannot deny the numbers going on, folks. When you look at numbers of 9.5% on a 2-year basis and just staggering numbers in double digits of a lot of foods. Eggs are great. Breakfast meats, sports drinks. Try to stay away from the sugary sports drinks, folks. Those are not healthy, but a lot of stuff in there. Big prices in a big way. All right, let's jump down the line in terms of what else we have going on. Stocks. Under Armour, they're trading lower in the pre-market, and that's having to do with Nike. Let's see how they open. Let's see how Nike opens as well. There's Under Armour, down about 2.5%. Nike shares down 5.7%, dropping from the open. Taking a look at Nike. Now, we said Nike, below there, 150.48. We are sitting literally to the penny at that gap, folks. We'll see how we react. We'll see if we hold it. We don't hold that gap. Watch out below in terms of Nike. You got a lot of room that you could drop below that price level. We covered Costco as well. Merck, along with AstraZeneca, announced Friday that the treatment using the drug Lynparza slowed the progression of prostate cancer in phase 3 trials. So they are up a bit on that news in a negative market as well. There's Merck jumping 1% to 73.82. And we'll finish it up with Cheesecake Factory, Dave & Buster's restaurant stock slightly higher in the pre-market after Jeffries upgraded the stocks to buy from hold. Said the full-service restaurants have seen traffic hold up well despite the spread of the Delta variant. So we're talking about cake and play. Give me some cake and let's go play. Why not? Cheesecake Factory up 4.5%. There's a bounce for you. And Dave & Buster's up 4.3%. Both of these stocks pulling back pretty harshly as the Delta variant took hold from April to September. But maybe this is just a situation of value play. We've pulled back to a certain degree. And I'm going to want to get the full collapse here in terms of COVID. So Dave & Buster's starts out at about $45. You make it down to $4. You make it back to 45 or 50, and you give it up a bit. But we're back to 41.60 right now. And Cheesecake right now trading at 49. You came into COVID at about 40. Man, these restaurants, quite the runs from the lows that we had in the better part of 2020 towards the acceleration we got early in the year before Delta took hold. Even Cheesecake. We had Darden out with their numbers earlier this week. Strong numbers for Darden. Look at this acceleration, right? Up to almost 160. We got an all-time high, on their earnings yesterday of 164.28 for Darden. And watch out, folks. This market is catching a bid on the open. Let's put it back to a short-term chart. We'll take a look at the 10-day, 30-minute. And there's your acceleration. We're up to 44.30. We were trading at almost 44.10 at 9 o'clock this morning. So you've caught almost a 20-point bid, from that price level. Again, highs overnight at about 44.50 in the S&Ps. All right, let's jump around to what else we got going on. We'll take a look at some of the airlines as they've had quite an acceleration this week with some of the travel restrictions eased. You got American higher about by 0.75% right now. Delta shares up 1% today when the market is lower. United Airlines up 1% as well. We take a look at Boeing. Boeing flat, catching a bid on the open. They're talking about some of those cruise lines in the Tigers down with Norwegian catching a pop as well. Norwegian up about 1.3%. You look at Norwegian from the close of action on Tuesday, you're up a solid 10%. Take a look at this thing on a little bit of longer term time frame. Want to get the full COVID collapse in here. So you're down to $7. You make it up to almost 35 recently. I have a chart on here, the Fibonacci. The run begins on the efficacy data of the vaccines is released. You trade from a price level of about $14.78 back in November. You trade up to a high of $34. Gotta love it, folks. How many bounces did we get at the 618, right? You got 1, 2, 3 bounces at the 618. And you rise from 22.81. We're trading at 27.72 right now. We'll see. Quite the relentless market this week, folks. We might get a positive market by the time we get into the close. Man, we only got 5 points to go. We might get a positive market by the time I get to break as well. Okay, let's see what else we got going on. What do I want to take a look at? So China, got a couple things up here. What else I had? A couple charts up here, I believe. No, we covered everything in that article I had going on. We covered Nike, inflation. What else we got? Yeah, the budget debate, that's always looming out there. Facebook's getting a new CTO, Andrew Bosworth. He's been with the company since 2006, developed key products and turned around crucial divisions, reputation for being direct with his peers and subordinates. I mean, that's a lot of fluff. You're going to have a decent reputation if you get a job like that at a company like Facebook. Let's see, we got Pfizer. Yeah, the booster deal. We'll talk a little bit about this when we get back because it is at least a muddled message, folks. You know, I've been out there. Please, if you have the ability, go out there, talk to your doctor, get vaccinated. We'll talk a little bit about the boosters, though. That's a little bit of a muddled message going on, unfortunately. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the Dow making it into positive territory, positive by 9 points. Let's take a look on a 5-minute basis. Look at that acceleration right out of the gate. It really starts to trade low at about 9:10 a.m. this morning. And just since then, we're up almost 200 points in the Dow. Again, we'll back it out to see the overnight action. Higher levels were about 100 points from the high we got yesterday at 34,749. You get the S&Ps negative by just 2 points right now at 44.35. There's your acceleration from a price point of about 44.11 at 9 a.m. this morning. Tech stocks still slightly lagging a bit, down about 0.5%, and you get the Russell down about 0.5% as well. All the markets catching a bid, though. Crude, how about that crude contract? Man, oh man. Excuse me. Come on, catch up. There we go. Crude, Tuesday, we're at 69.39. We're trading at 73.41 right now. Gold down $8 at 17.41, looking to potentially challenge the lows we had last night at a price level of 17.37. And we'll jump down the line to silver, off 50 cents. Silver really with the fall out of bed there this morning from 22.77. Silver's down 2.2% right now. And notes and bonds, we're down, challenging the lows we had from overnight right now. You're looking at a 10-year down 9 ticks at 132.03. That's correlating to a yield. You ready for this one, folks? 1.45%. Watch out, 1.45%. Let's take a look at the daily. Coming down to a critical area. I mean, quite the acceleration in the 10-year yesterday. Let's put it back on the 15-minute to see that full move. From Wednesday's Fed action, you were trading at 133.12. You trade down almost 1.5 points from that price level over the course of Thursday into Friday action. And as I said, dealing with 1.5% now of a yield, and you are right back to this consolidation area. You could call it an area of support. That area of support, the lower boundary line, we did get a low back in April of 130.25, so that's still more than a full point where we are. But you see that we chopped around for a while with the lower boundary at about 131.22, somewhere around there. You could say as low as maybe 131.18. That's correlating to the lows we had in early June, the lows we had in the middle of the June. Matches up to the lows we had in April 29th, also an area that we got to bounce back in March. And that's, man, we're right up against that level. You're talking about 16 to 18 ticks away from that price level, correlating to about a 1.5% yield. Remember when the market was comfy at about 1.5? Maybe we're coming back to being comfy at 1.5% again, as we're at 1.45% right now on that 10-year. Let's jump around to some of the FANG stocks and see. We get the NASDAQ still down about 0.5%. You have Amazon shares down about 0.2% right now. We'll jump to Apple shares. Apple down about 0.5%. There you go. They're going to weigh on the indices for sure. Microsoft shares down 0.2%. Google shares slightly in the red by about 0.1% as well. We jump over to Tesla shares this morning. Tesla trading down about a full percent. Tesla always a little bit more volatile than the market. We'll take a look at Facebook with a new CTO. Facebook trading down about 0.25% right now. We'll take a look at some of the stocks I enjoy. Disney trades lower on Tuesday on the news that they may miss the expectation for some of the numbers that they'll be coming out for Disney Plus. And you've clawed back a decent amount of those losses. We were trading at 179 when Bob Chapek announced that at a Goldman Sachs conference. You're back to 176 right now on their numbers. You take a look at Uber that I love to talk about. Uber catching quite a bid right now. Uber up 3%, 46.92. I talked about this in my newsletter, folks. We've had some severe pullbacks because I've been in this for about a year, the better part of a year, in terms of, I think we got in about $31 in Uber. Rode it up to 64, still in it. Volatility, though, right back on the big side. You see the type of move some of these stocks can have on volatility. You come into Monday trading at 38.38, and just like that, what is that? I got to do quick math. We had $8.50 about. You're talking about 20%, that or thereabouts. Not even sure what's driving it today in terms of what's happening with the action. They just must be buying. New York City passed something having to do with gig workers getting protection out there. Not a huge reaction to it, but nonetheless, Uber accelerating in a big way out there to higher prices. All right, we got the S&P negative by about 7 right now. Let's see what else I had up in here. Getting back to boosters real quick. So I talk about the vaccine, folks, right? It's unfortunate what's going on with the booster debate because it's clouding the signs of it because there's disagreements. The one thing that you can't say is everybody is saying what they believe. Nobody's getting pigeoned into not being able to speak on their belief of the science, and we're still getting data. It is unfortunate, though, that you have over and over in terms of areas of disagreement in terms of who may benefit. And the one thing that's a little bit muddled is that they're saying that people at highest risk in terms of people who are elderly should be getting the booster. That seems to be a consensus. There's not yet consensus on whether you have waning protection. The bummer of that is that if there's no waning protection, then I'm not sure why you're allowing it for frontline workers, because if the 2 shots work well enough, if you're exposed more often, it shouldn't really change things. Nonetheless, they'll be coming out with boosters for those looking in terms of older Americans and other vulnerable people, including high-risk occupational and institutional settings. A little bit unfortunate, though, in terms of the messaging. Messaging is so important right now when there's so much bad information out there that the clarity but important at a time that messaging has been very tough with a lot of the public in a big way. Okay, what else we got going on? Let's jump around. Elon Musk talking about a chip shortage is a short-term problem. Tech billionaire says he thinks chip shortages is a short-term problem as opposed to a long-term one. There's a big debate here, but he's talking about a lot of chip fabrication plants are being built, and I think we'll have a good capacity by next year. I mean, this is important. You've seen how the car companies in particular have really lost a lot. I think I talked about yesterday, $210 billion that the car companies are going to miss out on revenue for fiscal year 2021, $210 billion. That's almost $250 billion. That's bananas, to put it lightly. Chip heavyweights Intel and Taiwan Semiconductor have announced plans to build new plants. Yeah, they're spending billions to build new plants. But Elon, he's out there saying that it might not last as long as everyone thinks. The impact on Tesla this quarter, I think we'll continue to see that a little bit in Q2 and Q3. Had some of the most difficult supply chain challenges that we've ever experienced in the life of Tesla, and the same difficulties at supply chain with parts over the whole range of parts. Obviously, people have heard about it, as he puts it. Consulting firm Alex Partners predicted this week, yeah, there's your $210 billion that I talked about. Of course, everyone had hoped that the chip crisis would have been abated more than now, but unfortunate events such as COVID lockdowns in Malaysia, it's just a persisting thing. I'm not sure that's going to be as quick a turnaround. Elon is one of the best cheerleaders out there in terms of promoting his company, and I imagine he's giving an optimistic view at best of the scenario. We'll jump to some of the chip makers out there. You got Intel up about 0.1% today. AMD trading a little bit lower by 1.3%. All the markets back in the red right now, with Bitcoin down $3,250. We'll take a look at Ethereum. So Bitcoin down 7%, and we got Ethereum shares right now down 9.6%. All right, folks, stay tuned. We come back to finish up the show. S&P's negative by 10. We got the NASDAQ 100 negative by 101. Stay tuned, folks. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets in negative territory. S&P's -6 right now. NASDAQ -91. Dow just off 18 points after catching a bid on the open. And we get the Russell down about 17 right now. We jump over to the VIXs. We got Friday action. You get the volatility index 1912. Volatility getting sucked out a little bit in this market. Man, look at the volatility we got this week. We got about 3 minutes left to go in the hour. We got our man Basil Chapman coming up next. And we get the S&P's negative by just 4 points right now. Checking back in on Bitcoin. Catching a little bit of a bid off the lows there, up about $1,000 just in the last 45 minutes or so, from 41,000 to 42,015. You have Ethereum catching a bid as well from 2,800, bordering on about 2,900 right now, 2,888 on Ethereum shares. We'll take a look at crude up to 73.42, and we'll wrap the program up looking at the 10-year right now, as we just made a session low on the 10-year, 132.03. We're talking about a yield of 1.45% in that 10-year, and keep your eye on that 10-year because we're bumping up against the lower boundary line. Whoop, I may sneeze. Nope. It might pass. 131.15 is an area. The real low there, 130.25. But you start getting into this lower consolidation area, you see how many times we did bounce. 131.18 is where I would look for a potential bounce. We get below there, I'd say we're going to that low of 130.25 in the 10-year. All right, folks, thanks so much for tuning in. Of course, we got our man Basil Chapman up next. We got Fast Market coming up at 11. Larry Pesavento at noon. Steve Rhodes did his program this morning. It's going to be played. He'll be played at 1 o'clock as usual. Dave White at 2 o'clock. I believe we got a treat going on this afternoon. We may have our man Larry Pesavento doing double duty for the 3 o'clock hour, filling in for Tom on vacation on a little Friday action. But we got live programming going on all day, folks. Stay tuned. We got, and as I wrap it up, how about that? We got the Dow positive 5 points. And with 30 seconds left as we play out the music, folks, we get the S&Ps catching a little bit of a bid as well. Relentless dip buying. We'll see how Friday goes. Thanks so much for tuning in, folks. Stay tuned. We got our man Basil Chapman coming up with the Tiger Technicians Hour. He's up next. We'll be right back, folks. Stay tuned.